Want to know about some fantastic long-term investment opportunities? Looking for market-beating yield and inflation-beating growth? Would you like to know my top 5 stocks for September 2021? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, if you want exclusive access to my personal 6-figure stock portfolio and alerts on any new investments I make, check out the Patreon link in the description below. High-quality dividend growth stocks are some of the very best stocks in the entire stock market. After all, it takes a special kind of business to be able to produce ever more profit in order to pay out ever higher dividends. These stocks are like the golden geese that lay ever more golden eggs. I have first-hand experience with this. I used the dividend growth investing strategy to go from below broke at age 27 to financially free at 33. Indeed, I retired in my early 30s in favor of living off of growing dividends, and I've got to say, it's worked out wonderfully. By the way, I explain exactly how I achieved financial freedom in just 6 years in my early retirement blueprint. If you're interested, you can download a free copy of my early retirement blueprint using the link in the description of this video. In every market, there are deals to be had and opportunities to be taken advantage of. And that's what I'm here to talk about. Today, I want to tell you my top 5 dividend growth stocks for September 2021. Ready? Let's dig in. My first dividend growth stock pick for September 2021 is Air Products and Chemicals Inc., stock ticker APD. Air Products and Chemicals is a global producer and supplier of industrial gases. With a market cap of $60 billion, this is an industrial gases major. It's part of a global oligopoly which limits competition and keeps pricing rational. As an investor, I love oligopolies. It's fertile ground for higher profits. We can see that here. While revenue is flat over the last decade, that's due largely to spin-offs and divestitures. Meanwhile, they've compounded earnings per share at an annual rate of 4.67% over the last decade, and that's even after using lumpy GAAP earnings per share. If we look at adjusted earnings per share, which is arguably more accurate in this case, the company is calling for 7% to 9% year-over-year growth in adjusted earnings per share for this fiscal year. What does that translate into? Plenty of growing dividends. Air Products and Chemicals has increased its dividend for 39 consecutive years with a 10-year dividend growth rate of 10.3%. That double-digit dividend growth comes on top of the stock's market-beating yield of 2.2%. And with the payout ratio at 66.4%, based on midpoint adjusted earnings per share guidance for this fiscal year, the dividend remains easily covered. You can almost set your watch to this one. The dividend should continue to grow at a high single-digit rate for years to come. Surprisingly, this dividend aristocrat looks downright cheap. I performed a full analysis and valuation on the stock not long ago, estimating intrinsic value at slightly over $329 per share. With the stock currently around $270 a share, there appears to be a lot of upside here. Plus, you get that market-beating yield and inflation-beating dividend growth. My second dividend growth stock pick for September 2021 is Johnson & Johnson, stock ticker JNJ. Johnson & Johnson is a multinational healthcare conglomerate. Johnson & Johnson isn't just a pick for September 2021. It's a pick for pretty much any and every month of any and every year. It's a classic blue chip dividend growth stock that you buy and then tuck away in a drawer for the next 30 years. The quality is obscenely high and the consistency is out of this world. They won't knock you dead with growth. Revenue is compounded at an annual rate of nearly 3% over the last decade, while earnings per share has a compound annual growth rate of more than 5% over that time period. However, it's the relentless consistency that is so remarkable here. Want evidence of that consistency? Well, how about this? They've increased their dividend for 59 consecutive years. That makes them a dividend aristocrat nearly twice over. That time frame stretches wars, political upheaval, recessions, and even a global pandemic. None of it could stop this machine. The 10-year dividend growth rate is 6.5%, which is paired with a yield of 2.4%. And with a payout ratio of only 44.4% based on this fiscal year's guidance for adjusted earnings per share, you already know that the dividend is going to be increased yet again next year. This stock is up a decent 11% this year, but I think there's a lot more gas in the tank. Will this stock explode higher this month or any other month? Of course not. It's not that kind of investment, but if you want a long-term dividend growth stock that allows you to sleep soundly at night, Johnson & Johnson with its AAA credit rating is the kind of investment that sweet dreams are made of. Most basic valuation metrics indicate that the stock is within a range of fair value here. For instance, the price to cash flow ratio of 17.8 is only slightly higher than its 5-year average of 17.5. This is a steady Eddy dividend growth stock that can be the cornerstone of a diversified portfolio. My third dividend growth stock pick for September 2021 is Merck & Co. Inc., stock ticker MRK. Merck is a global pharmaceutical company. I think this is an underappreciated business. They have Keytruda, which is the second best-selling drug in the world, and it's expected to overtake Humira, the world's #1 best-selling drug, by the middle of this decade. Merck will have the best-selling product in its entire industry. While revenue is flat over the last decade, earnings per share has a compound annual growth rate of 12.73% when using adjusted earnings per share for the most recent fiscal year, and Keytruda didn't come on the scene until 2015. The future for this company is even brighter than its past, which was already quite bright. Their dividend future is quite bright too. They've increased the dividend for the last 10 consecutive years. The 5-year dividend growth rate is 6.3%, which is solid. However, where Merck really shines is with the yield. The stock yields a very appealing 3.4%. That's almost 3 times the S&P 500's yield. It's also 50 basis points higher than the stock's own 5-year average yield. And the payout ratio is a low 47.1% based on this year's guidance for adjusted earnings per share at the midpoint. Big dividend, big growth, that's the story here. Despite there being so much to like about the business, this stock appears to be significantly undervalued. Like I said, it's underappreciated. I very recently highlighted, analyzed, and valued this stock, estimating intrinsic value at about $92 a share. The stock is currently below $77 a share. We're talking about potential 20% plus undervaluation here on a high-quality dividend growth stock that offers a market-beating yield near 3.5%. You could do a lot worse than Merck as a long-term investment right now. My fourth dividend growth stock pick for September 2021 is Pinnacle West Capital Corporation, stock ticker PNW. Pinnacle West is a utility holding company operating in the state of Arizona. Pinnacle West is one of my favorite utility businesses. While these are typically slow growth businesses, what makes Pinnacle West unique is their exposure to the Phoenix metro area. Phoenix was the fastest growing city of the top 10 US cities over the last decade. That's why it's not surprising to see this company sport some great bottom line growth. While revenue is compounded at an annual rate of 1.13% over the last decade, earnings per share has a compound annual growth rate of 5.18%. That's kind of an eye-popping number for a utility. Also eye-popping are some of the dividend metrics. This stock offers it all: high yield, great dividend growth, and a moderate payout ratio. The stock yields a market-smashing 4.3%, which is a full 90 basis points higher than the stock's own 5-year average yield. The 10-year dividend growth rate is 5.8%. So you're getting a 10% plus combination of yield and growth here on a utility, which is quite uncommon. And with a payout ratio of 67.5%, this is a well-protected dividend. This stock has underperformed recently, and that's where I see the opportunity. It's down about 2% on the year, which is surprising, but that's why the yield is high and the valuation low. Speaking of valuation, I put out a video not long ago highlighting this name and showing why it could be worth $89 a share. It's currently below $78 a share. I actually bought this stock myself in late August for less than $77 a share and alerted my patrons about that move in real time. If you want a high yield utility with exposure to the fast growing Metro Phoenix area, Pinnacle West should absolutely be on your radar. My fifth dividend growth stock pick for September 2021 is US Bancorp, stock ticker USB. US Bancorp is a large bank holding company. Want to invest like Warren Buffett? Well, here's your chance. Buffett, through the common stock portfolio he manages within his conglomerate Berkshire Hathaway, has over $7 billion invested in US Bancorp. With some of the best fundamentals out there among large banks, it's not hard to see why. Now, the last 10 years isn't a good look for this bank or any other bank for that matter, because the pandemic's impacts on 2020 numbers has been monumental. But revenue still has a 10-year compound annual growth rate of 2.51%. And if we back things up 1 year and look at the 9-year compound annual growth rate for earnings per share, it's nearly 7%. Banks were at the mercy of 2020, but this company stayed true to its dividend commitment. That's why I love high-quality dividend growth stocks. I stay loyal to them because they stay loyal to me. They really are the golden geese that lay ever more golden eggs. And when you're living off of dividend income, this kind of reliability is exactly what you want. This company has increased its dividend for 10 consecutive years with a 10-year dividend growth rate of 10.9%. That inflation-beating double-digit dividend growth comes along with the stock's market-beating yield of 3%. And with a low payout ratio of 39.5%, the dividend is easily protected and positioned to continue growing. This stock is up about 22% so far this year, but it still looks undervalued to me. My recent analysis and valuation video on US Bancorp shows how shares could be worth over $61 each. The stock is currently slightly over $56 a share, so it looks almost 10% undervalued. And you also get a market-beating yield and double-digit dividend growth. Oh, and you'd be owning shares alongside billionaire investor Warren Buffett. That's nearly a slam dunk. Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did, and let us know in the comments what you think about these top 5 dividend growth stocks for September 2021. Please make sure to subscribe to the channel and ring that notification bell so that you don't miss out on new content. Also, take a look at the description box below for some important links, including the link to my personal stock portfolio. This 6-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I've made my portfolio entirely accessible over a Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is, and I'm often invested in the same high-quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who have been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.